Welcome to the Money GPS. You came here for the Johnny Depp, so let me Amber Heard that for you. Today we are going to look and fully explain what's happening with insiders. What are they doing right now? I'm also going to talk about the retail investor and looking at exactly what they have been achieving over the last little while. I will give you the insight there. We're going to talk about the economy as well, inflation, and so much more. Let's begin by taking a look at the interest on the debt. It's a huge threat here. Why is that the case? Well, of course, as we see interest rates going up, as we see inflation going up, these two things are going to have an impact on what businesses, on what people, and of course, the nation itself is able to pay. You got to understand what's happening. All of this debt continues to pile up, and there's always going to be interest attached to it. Now, if you've got a credit card, that's a very high rate of interest. If you've got a variable mortgage rate, well, probably less, but it's still going up. And then you see what's happening with the national debt. You look around, and there are always varying degrees, but this is really key to watch. Then we have this. Signs are pointing to a slowdown in the housing market. At last, you look at other factors. Even chicken is getting too expensive. That's right. Somebody wants to have, let's say, a steak. Then they'll have maybe some ground beef or chicken. And then it goes down, 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 down. And then, and I want to say something, but I'm probably censored by it. But anyway, you know what they say, you will own nothing and be happy. That's sort of theme, right? Hunger Games and so on. Over $50 for a burrito. World's elite splash for the cash on snacks at Davos. That's right. Seems to be paying a pretty high price for a burrito. But anyway, the point is just showing us that some people are able to afford basically anything. If you're willing to spend $50 on a normal burrito, it's not wrapped in gold or something, well, then obviously you have enough cash to fill the jet fuel for your private jet to head back from Davos to wherever it is that you live, I guess. Summer bummer. 56% of Americans fear that they can't afford vacation this year due to inflation. It's interesting, though, because I get a lot of information that doesn't show that that's to be the case because of how much is being spent on vacations. If you look at it, there seems to be a lot of demand for this right now. Now it depends on what type of vacation. Are they going in their RV and going to see the Grand Canyon, or are they going overseas to enjoy the sights? That is something that I don't have the data on, but anyway, I'm getting conflicting information to say the least. Rising interest rates concern apartment building owners as well as renters. Returns fall below mortgage figures, with landlords needing higher rents to fill the gap. The translation here: expect higher rent prices. That's right, my friends. Of course, rising interest rates impact everybody to a different degree. Now, I want to show you what's happening with first the smart money, and then as it relates to the insiders and retail investors. Is the recent stock rally real? The smart money index shows out. And you can see the smart money index, it's been selling off over the last little while. Of course, there is always going to be changes with this, but the S&P 500 has been going up higher, and the smart money has been clearly selling off. Now, essentially what we're looking at here with the smart money index, think of this like the big buyers or institutional buyers, versus the S&P 500. So that just gives us a little bit of insight as we move on to this. Desire to short Cathie Wood's ARK is dropping almost as fast as the fund. Short interest as a percentage of the shares falls from April high. Why? Because the stock is down so significantly. How much juice are you going to get out of this? And this is actually quite smart for many to do, I believe, to take profits. If they've made their profits, maybe they made 50% on that. You simply take profits. Always take your profits when you can, or at least trim some of those winnings. Okay. This is funny because it's talking about Cathie Wood, and actually you don't get this often, but they're saying that, hey, she's, once the top, now she's at the bottom, started from the bottom, now we're here, kind of in reverse. This is just showing us that apparently her old boss said this: her biggest blind spot is managing risk and volatility. And apparently, according to this article, a serious charge against someone who is responsible for other people's money. Now, let's look at the details here. The insiders right now are buying at a pace we have not seen since 2020. So who's right? Is it the smart money? Is it the retail investors? Is it Cathie Wood? Who is it? Well, we'll find out in time, but I can show you right now that insiders have definitely been buying in. Okay? So that's the case right now as we see it today. It doesn't mean that, tomorrow things can change rapidly. And that has happened many times before. But I wanted to show that to you. You can look at this. This is basically just showing us over the past few trading sessions what had happened. And actually the last one that's on here is the 24th. But anyway, you'll get the idea. It's that, by the way, this little dip in here, right here, you're seeing this. I hope you can see that. I'll pull out the highlighter just to give you an idea. This is, by the way, total net retail buying of US securities. This dip in here is when the markets briefly dipped into a bear market territory, okay? What happened at the end of the day? Well, you had this. Retail investors buying it up, okay? Massive. Now, you're always going to get a lot of buying and selling that takes place, a lot of the volume around the open and the close. But this is just giving us a little bit of an idea of what's happening today. Retail investors coming in at the end of the day and trying to buy the dip. Retail investors net buying versus total traded value in US securities. Again, showing us that the typical retail investor is buying the dip. This is just showing us as well the weekly number of mentions of bottom in social media that has risen considerably right now. So many investors on the retail side believe this is the bottom. Google Trends in the US for market bottom has accelerated as well to a level we haven't seen since March 2020. Retail investors net buying, again, more of that. And then we have this. Unprofitable tech stock basket. Now, what does this tell us over this period of time? These names right here, those names that we saw? I mean, it was Zoom. What else? We had Peloton. We had even Netflix, if that's one of those in the back. I'm not necessarily saying in this stock basket, but you just had all of these names. And this rise up, Cathie Wood, she's the greatest investor. Jim Cramer said she's a genius, quote. And anyway, all the while up, you see that some people look to be so intelligent, but then something changed and the markets crashed down, and it was led by the unprofitable tech stocks. So the ones that did the best on the way up did the worst on the way down. And historically, that happens over and over and over again. It's always like that, it seems. So right now, we may see this turn around, at least for some of the stocks. Certainly there has been a big change. I've always made this case. We have the sine wave. I've shown you this 100 times. So we have this period of up and down of, going from overvalued to undervalued. That happens. When this market comes back up, there's a question that I have for you, and that is, what comes back up? So will Zoom achieve what it did during this rise up? Will it become more valuable than ExxonMobil again? What about Peloton? What about Netflix? What about Amazon? What about Apple? I mean, any of these stocks. And you might think to yourself, well, that stock might, but maybe not that stock. And that's what we have to think about during these periods. We have to start being real about the situation. Was this Zoom stock, I don't even know what it was, let's just make up a number, at 100, and now it's at 25. Did it ever deserve to be at 100? Because if not, well then maybe we don't necessarily want to get into that stock because we don't think it can rise significantly from this point. Maybe we can do a trade. Maybe we can short-term hold. Maybe we can do a swing trade. But maybe we don't want to have a long-term hold for that. But maybe we think to ourselves, hey, Apple, Well, it's off from its high, but I think it's strong because of this and that. And so as a result, maybe I'll buy Apple because I do believe that Apple is going to be able to rise up on the other side. So then we would add to positions in Apple. You see, we have to be more intelligent, more conservative, more prudent about what we're doing instead of just saying, buy the dip. Because those words right there, that's like famous last words, okay? You don't want to indiscriminately buy, and you don't want to say that particular stock was at that price before, and the Federal Reserve is going to help us out, it's going to push everything back up, because that's just unwise. We need to make really good decisions with our money, because as you can see, your value of your portfolio can diminish rather rapidly. If you are investing like the ARK fund, well then, and if that's the way you do things, or if you invested in the ARK fund, those swings in volatility are going to hurt you real bad. And then you have to ask the question, what comes up on the other side? Okay. I had a lot more to discuss. But I think it's important to see what's happening today, to look at all the indicators popping up in your face. And all of this could be a distraction, because what you need to understand is you, your portfolio, your household, your family, and all of that. Okay. So that's so important. I hope you appreciate it. If you did, hit that thumbs up button. Do you want to know the truth? Do you want to know the real deal of all this out there? There's so much jargon, there's so much nonsense going on, and I try to break it down every single day. If so, hit that subscribe button, okay? Because that's where you're going to get the best intel each and every day when you hit that thumbs up. Also, it will notify the algorithm that you love this stuff, okay? So I'll see you in the next one. Take care.